really the focus is on customer acquisition in underserved markets. Now, all of you know that insurance penetration across the continent is significantly lower than in other areas. I believe Kenya is at 3%. Ghana, I think, is closer to 1.5, but don't quote me on that. Some of the core challenges that come around customer acquisition is around how you actually get customers to adopt or start using insurance if it's something that they don't understand, they don't see others using. So it's really important to think about how we actually get to our customer, and then how do we actually get that customer excited, aware, eager to adopt something that maybe isn't typical or common. So today we're going to engage with this topic from two lenses. Of course, we're also eager to hear thoughts and feedback from those of you on the call. But we're going to be looking at this from first a research lens. So we're going to understand some research that's already been done by Busara Center for Behavioral Economics to understand how farmers think about insurance, what drives or increases the adoption or use of insurance, and how can we take some of these learnings and apply them to your different contexts. For our team who's actually here with farmers as their focus, this content is going to be particularly relevant to all of you. And then we're really lucky to be joined by Roxanne, who has many years of sales experience that he'll be bringing to share the different ways that he thinks about customer acquisition. This also is an opportunity to hear what is working on the ground, and ideally to connect that back to the research that's been done that can help all of us think about what we can do differently to reach our customer base. So tonight, just for this evening, I am going to step into the role of Busara very briefly, and we'll be sharing part of this session from our last Bima Lab in Kenya. Unfortunately, Nate has a family emergency and won't be able to join us today. He is reachable, so if you have questions, you can drop them in the chat and I'll send them to him. In addition, any questions that can't be answered today, Nate said that he would be willing to make sure we get a response to them. So first and foremost, thank you all so much for your understanding. We're really lucky, though, that we actually had an opportunity to record Nate's partner, Miriam, who has been on the ground doing research in Nigeria with farmers. And I think I rewatched it before this session. I think there's so many important points that she calls out that I want to start today's session with that content. And then Roxanne's going to have an opportunity to build on what was shared, connect a little bit of what he's already doing back to the research that Busara has found. And I think hopefully many of the teachings and elements that come out of this research can be easily applied to the different contexts in which you're working. Christian, if you're on the call, there is a huge amount of evidence around the importance of education, which I think really connects with the work that you're doing with Anks & Co. So with that, I'm actually going to transition us to getting to know Miriam. As I shared, please continue to engage as if the team from Busara is here. I'll either get your questions answered live, or I'll be able to to get those questions answered and send them out into an email to all of us. So with that, I'm going to do a really quick shift over, but so excited to be here with all of you today. And please, share your questions and feedback so that we can all learn together and from one another. While I do that, here we go. Little bit of please holler if there's any moments of technical challenge for all of you in viewing this. I am, happy to solve those. So please just reach out if you need any help. I'm going to pause. Are there anyone who I'm hearing that you can't hear sound?
Yeah, there's no sound.
Okay. Do some momentary, quick, strategic problem solving. Let me see. Boop. Can you hear that?
No, still no sound.
All right, give me 2 seconds. Miriam, can you do me a favor and attempt to share on your side? And if it doesn't work, then I'll just kick it over to Roxanne and we'll start from there.
Okay.
Yeah?
Just a sec.
Cool.
Let me track.
Good. Give me a second to also figure out if it's some sort of formatting thing I can fix on my side with sound. And if not, well, then we're just going to start with Roxanne and I'll do problem solving in the background. All right. Hold on. Oh, hold on. Give me 2 seconds. I may or may not have just fixed it. I love a good technology moment. That's why you guys are the tech part of InsurTech. And I am just.
So,
you hear this
as she
now?
said, my name is Miriam Youssef. I'm an associate at the Busara Center, and we've been working.
Is that one working, guys?
Yeah, we can hear the sound, Emma.
Sorry, everyone. Thanks for allowing me to be tech struggling, and thank you all so much for, there we go. All right, let's get to know a little bit about Busara, and thanks for your patience and understanding.
Perfect. Can everyone see my screen? Hope it's being shared.
Yes, we can.
Okay, perfect. So yes, Emma's done a great job of doing the presentation. So as she said, my name is Miriam Youssef. I'm an associate at the Busara Center. And we've been working closely with PULA on really understanding farmer behavior towards agricultural insurance. Just a bit of background about Busara. We mostly specialize on on using behavioral science to really leverage human-centered design and help both public and private sector stakeholders to optimize the delivery of products and solutions that really help drive desired behavior. And what we believe is that there are many other external factors that play into how people make decisions, not just financial service decisions, but decisions across many other spheres and areas. And the first is really the environment, the second being motivation, intrinsic motivation, memory, which is mostly our experiences from the past, and peers. So what other people around us are doing, what people we look up to are doing, and what people within our networks are doing. And you'll see that as we present that all these kinds of factors do play into how farmers make their decisions about using insurance. So what exactly did we do? So we've been working with PULA over the last year and a half, and we've been working as a learning partner mostly within Nigeria. So we've been working across northern Nigeria, specifically with smallholder farmers, to really understand what their behaviors are towards bundled insurance. We've spoken to over 80 farmers and agricultural stakeholders, including agents and supply side stakeholders across the different agricultural value chains. And we've conducted experiments with about 2,400 farmers, most of which are male, mostly because farming decisions and farming businesses are mostly led or dominated by men in the north. They make a majority of the farming decisions. Although women play a significant part in agricultural labor, they're the ones who make most of the decisions around what products and services to use for their farms. So that's why they make up the majority of the demographic of farmers that we spoke to. So our research was split into two phases. The first phase of our research is what we presented earlier on in this year in February. And that really focused on understanding behavior towards fertilizer bundled insurance. So basically bundling insurance with agricultural inputs. The second phase of our work, which we've just concluded throughout the course of this year, has been around behavior towards credit bundled insurance. So insured loans offered to farmers, or the prospect of benefiting from an insured loan program. And from phase 1 and phase 2 insights, we've been able to sort of synthesize some key themes that we believe feed into the topic for this discussion, which is how to drive customer base in underserved markets. And these themes cut across, first of all, awareness and knowledge, trust, risk, time preference, and communication and messaging. For the purpose of this presentation, we'll focus mostly on the first three and the last, which is trust, awareness, risk, and communication and messaging. If we have enough time, I'll move on to time preference, but I know that we do have a limited amount of time to discuss some of these themes. But the first thing is awareness and knowledge, and really understanding what is the baseline of understanding of insurance products across the target market that we were looking at. Lack of knowledge is really detrimental to underserved markets, and you have to understand what you're buying before you can actually ascribe a certain amount of value to increasing the desirability for a product. And from the farmers that we spoke to in our first phase, we found that roughly half of them had some experience or had some awareness of insurance. So we divided them into three buckets. So we had those that had never heard of insurance, those that had heard of insurance but weren't really sure what it was or the value that they stood to gain. And then we had the final bucket of those who had heard of insurance, had some experience with it, or had a little bit of knowledge on how it works and what they stand to benefit from it. Most of the farmers that we spoke to fell into that second bucket. So that second bucket meaning that they knew a little bit about insurance, they've heard the word thrown around here and there, but they really didn't understand how it worked or how it applied to their personal farming practices. And we found a direct relationship between the level of understanding and awareness of insurance and what insurance actually does and their willingness to pay for it. So how much a farmer is willing to pay for bundled insurance was directly correlated with the level of understanding they had. The more they understood, the more likely they were willing to pay. So they're willing to pay 3% more. And the less they understood, they were 4% less likely to pay a premium for insurance. We found that most of the understanding around insurance was with health insurance or car insurance. So a lot of people understood the mechanisms or were aware of the concepts of health insurance and car insurance, but really didn't understand how insurance could benefit them in agriculture.
I just want to pause at this point, because I think that key things that really stuck with me is about how effective a company is in providing simplistic information about what insurance is. And as Miriam's going to continue, she's going to talk about language and other elements that are critical to actually making insurance more accessible, even shifting simple language that can help shift people's perspective. And so part of what I want you all to start thinking about and the barriers or challenges you've had with customers is around this component of lack of knowledge or lack of access to knowledge, and what kind of role that has played with the customers that you have.
So this leads us to the second element that we looked at, which is trust. So how can we develop, so based on the level of understanding and awareness that people have, considering all things equal, when farmers do have some level of understanding of awareness, how else can we build trust and help foster trust to develop a customer base for insurance? And for this, our research focused on two main key factors. The first is leveraging organizational or institutional trust, and the second is building trust through transparency. The experiments that we covered in the first phase really tried to look at what type of organizations do these farmers trust, and what organizations can be leveraged and partnered with to help improve trust in insurance. So we looked at a variety of organizations. We listed some of the organizations that farmers interact with mostly, and this included the Bank of Agriculture, commercial banks, private businesses, particularly those within their value chains, so input suppliers, logistics companies, any kind of private businesses or private enterprise within their value chain. And then we looked at local farming associations, and then finally government. And government was quite broad. We didn't specify it to a particular agency, just government in general. And we tried to assess the level of trust they had across three metrics: fairness, competence, and reliability. And we asked these farmers to report how they felt about these different organizations and how willing they were to entrust their money or pay for insurance through these organizations. And we found that compared to all the rest, local farming associations were the most trusted. So this was both for men and women, but we found that this was particularly the case for men compared to women. We found that although women did trust local farming associations more than the other organizations we tested, they tend to have weaker ties to these local farming associations because they're mostly dominated by men. The religious and cultural norms around northern Nigeria mean that women don't really engage too much in these kinds of networks and groups, and therefore their ties to these organizations are slightly less strong compared to men. However, we did see a significant difference in the level of trust that these farmers ascribed to local farming associations, just because of the familiarity, the fact that they're more accommodating, the fact that they have more frequent relationships with these types of associations than, for example, with government agencies, private businesses, or commercial banks. The second phase of our research tried to unpack this a little bit more and understand how this ties into insured loans. So we tried to break this down, not just local farming associations, but also national farming associations. And what we did is we tested scripts that offered insured loans to farmers, and we randomized these scripts into 6 different treatments. Each treatment represented a provider. So we had government, insurance companies, private businesses, local farming associations, national farming associations, and government. And farmers were randomized into these treatment groups and were offered an insured loan program from one of these providers. Interestingly, we found that organizational trust was actually highest when national farming associations or national bodies were leveraged compared to local bodies, governments, insurance companies, or any other of the organizations that we tested. We found that farmers were predicted to be 7.4% more likely to trust that they would receive the benefit of insurance when it was delivered through a national farming body association compared to a local farming association or any other type of organization. Farmers were also more willing to recommend insured loans when it was delivered through a national farming body. And I think this kind of mirrors the work and the traction that is already being done with some of the big leaders in terms of providing bundled insurance, like DigiFarm and AgriPay, who are very active in East Africa. And they leverage a lot of the commodity associations. For example, the National Dairy Association in Kenya and the Cotton Association in Zambia are heavily leveraged to drive uptake of digital agricultural services among smallholder farmers, particularly women as well in these areas. And we see that leveraging these organizations is much more effective because of the credibility that these farmers ascribe to these organizations. The fact that they are more active than some of the local associations and cooperatives, and the fact that they've reached a level of national credibility that they're able to convey a higher level of trust compared to the other organizations that we tested. Secondly, we looked at transparency and education. So we asked farmers, what would make them trust insurance more? And based on the responses that we got, we were able to rank them. And we had the first two that came up from the kind of qualitative assessment we did was adequate and consistent education and readily available information. And this was especially the case for farmers who had no idea what insurance was, and even those that had heard of it but weren't really sure. It was consistent across all the buckets of awareness and knowledge that we had identified. It was really key because what we found from the qualitative studies is that although some farmers have one-off interactions and workshops around insurance, the information isn't consistent. It's very, soft touch, and they feel that they don't have enough reliable sources to go to. And rather than depending on word of mouth, which is very common, they prefer to have consistent and reliable channels and platforms from which they can learn and understand how insurance applies and the benefit that it has to offer to farmers, particularly smallholder farmers. Secondly, we looked at risk, and this was around developing your customer base by minimizing perceived risk. There are different types of risks involved, not just the risk of engaging in a new product like insurance, but the perceived risk of what needs to be insured. So the level of risk that farmers think need to be insured. And looking at risk, we broke this down into three buckets, three main factors. The first being priming a sense of control. The second, understanding how descriptive and social norms can help play into minimizing perceived risk and emphasizing the importance of insurance. And then finally, transparency and organizational trust, which kind of lends itself from the trust experiments that we did. With priming a sense of control, with most of the farmers that we spoke to, this quote kind of categorizes the sentiment that we see. And this is from a farmer in Kaduna, which is within northwestern Nigeria. And he said, whatever happens, natural disaster or flooding, whatever it may be, one will have to take consolation that it is a natural disaster and therefore nothing can be done about it. And this sentiment was quite common both amongst men and women, this sense of inevitability or complacency with the fact that some risks cannot be mitigated. And we see this a lot even beyond the space of agriculture, where people are more reactive rather than preemptive in terms of mitigating risks. And what we try to do is understand, so what level of risk are farmers willing to insure? And with this, we did a very simple experiment.
And I think what's particularly interesting, or sort of to call out from this research specifically, is that the higher the risk, the more they found people were less interested in insuring. But when it was a medium risk or a medium risk, there was more of a desire to insure. And I think that what they call out here that I think is unique and interesting is that there's a real cultural element to this concept of perceived risk. The idea that some things you can't control, they're just a reality of life, where there are other things that you have more ability to control. And so they found, particularly where people felt that they had greater control, they actually found that there was more willingness to have insurance or to have some sort of coverage, but the higher the risk, the less they felt they could control for, the more they decided not to insure. So just an interesting tidbit. I'm going to skip this part a little bit because it gets quite technical, but I'm then going to jump us into sort of key learnings from this.
Also had an effect of minimizing perceived risk. So for example, national farming associations, when farmers were offered insurance, insured loans through national farming associations, they were the least likely to have a larger sense of risk. And we also found that the way that insurance was communicated or explained also had an impact on the level of perceived risk. So insurance that was explained through procedural or instructional narratives rather than just very brief emphasis on payouts. So communication that emphasized how the payouts work. What is the process for being eligible for a payout, rather than just emphasizing the possibility of a payout, had a higher effect on minimizing the perceived risk. And by perceived risk here, it is the self-reported risk that farmers provided during our experimental interviews and as well as our experimental games. And then finally, descriptive norms versus social proof. A lot of the work that has been done around social proof and social norms kind of use these words interchangeably, but we try to unpack exactly what the impact of social norms is, and with this we describe it as beliefs or perceptions of what is acceptable behavior. And then with social proof, we describe this as evidence or proof of a social norm or a behavior or the outcome of a behavior. And we try to test this in the scripts that we randomized across the different farmers. The first social norm script told farmers or offered farmers an insured loan, but also had the caveat that 500,000 farmers in their region had already signed up for an insured loan program. The social proof treatment stressed the number of people that had qualified for a payout. So the social norms here tries to emphasize the acceptability, the fact that many people have signed up, although it doesn't emphasize the evidence or the proof that the behavior actually works. The social proof emphasizes not only that people have signed up, but they've actually qualified to receive a payout. And interestingly, we find that there is strength in numbers rather than just strength in payouts. We find that communicating mass popularity of an insured product actually went further to improve desirability, trust, and reduce perceived risk of insured loans, which is quite interesting because most research points mostly to social proof. But it's important to know that in most of the research conducted around this couples social norms and social proof. So they're most likely used in conjunction rather than used separately. But it was interesting to note that just social norms on its own was able to improve the perceived desirability and perceived trust in the benefit of insurance. And finally, communication and messaging. Here we look at how we can really drive customer bases in underserved markets through the way that we frame information. And for this, we broke this down into 3 different buckets. The first being framing effects. And framing effects touches more on the choice of words. So being very particular about the kinds of words used to present, communicate, and advertise insurance. The second being messenger effects, which mostly focuses on who is communicating. So who is the messenger? Who is delivering this message to the farmers or to the potential target market? And then finally, the narrative or explanation styles. And this differs from framing effects because framing effects is more on the choice of words, whereas narrative styles is more on the tone of the communication. So we can have testimonial style narratives, we can have more procedural or instructional narratives, and we can have very short and direct narratives. So we try to test what type of communication works best in improving desirability, trust, and reducing perceived risk among smallholder farmers. In the first phase of our engagement with Paula, we really focused on framing effects. And from the qualitative work we did, we discovered that there was a lot of negative connotation around the word insurance. This was both among men and women, even at the very rural and grassroots level, even people that didn't even know what insurance was. There was this negative association. People always ascribed it to be a scam. You know, even if they hadn't had any experience with insurance, it was always perceived as some kind of scam or that it would lead to some kind of scam, which is quite worrying, that this was kind of like the general sentiment. So we wanted to understand, okay, how can we present insurance without actually using the word insurance? And we tried to test different framings of insurance, and we tested insurance on its own, we tested protection, and then we tested guarantee. And all of this was translated into the local language, because all of the experiments that we did were conducted in the local language of the region that we were in. And we find that with insurance, when we asked farmers how willing they were to pay for fertilizer that was insured compared to fertilizer that was uninsured, we find that when described as protection, farmers were 9% more willing to pay for insured fertilizer out of their own pockets. This is not free for insurance, but actually insurance that requires payment. And this is quite surprising. And I think it just goes to show how simple alterations or simple framing effects can have such a significant impact on willingness and perception. Although we didn't calculate actual spending, this was just self-reported willingness to spend on insurance. We also looked in the second phase of our work, we also took it a step further to understand how can we reframe the subject of insurance, or the item or the item or the thing that is being insured. Insurance is often described as protecting an individual, someone's self from loss. And in agriculture, we tend to focus more on crop insurance. And a lot of insurance is sort of bundled under this umbrella term of crop insurance. But what exactly does the term crop insurance mean to the average farmer? We really wanted to understand how varying the subject matter of insurance can vary the perceived willingness to register for insurance and the trust in the insurance itself. So we tested three variations. We tested the use of self, and in the script that we tested, we used the loan comes with free insurance and it protects you in the case that you have a bad season. And we tested the word livelihood, and the sentence read, the loan comes with free insurance to protect your livelihood in case you experience a bad season. And then finally, we tested the word crop. And this was quite surprising because we didn't think the differences would be that stark. But interestingly, just using the word livelihood improved self-reported trust in insurance by 12%. And this is quite significant because if you scale this across a much larger population, it does have quite a significant effect. And we also found that using the word livelihood had a higher impact on overall satisfaction in the value proposition of insurance, meaning that the farmers felt that insurance was more useful. The farmers felt that insurance would actually give them a valuable benefit, and they trusted that they would actually receive the benefit if it was described as protecting their livelihood. And this just goes to show how simple framing effects can alter the perceptions that farmers have about the value proposition of insurance. Although livelihood can be interpreted in different ways, I think the impact of the word livelihood means that it's not just it's protecting, it inspires or it provokes a value system that cuts across beyond the crop. So they consider their income, they consider their families, they consider the sustainability of their farms when they think about livelihood, whereas just saying crop insurance doesn't really convey a sense of salience to a lot of the farmers that we conducted these experiments with. And then finally, what is the appeal? So how can we appeal to more farmers and to appeal to people generally in understanding the value proposition of insurance and improving their perceived perceptions of the risk associated with using insurance? So minimizing the risk that they associate with insurance products and improving their sense of control to mitigate their risks. The first has to be clear and transparent. I think this was one of the main insights that we got. As simplistic as this is, it really cuts across how we frame and how the narratives we use affect the audience that we're communicating to. So we found that testimonial style narratives, rather than just very simple, precise narratives that just focus on the benefit or the payout of insurance, work more effectively. Sorry, excuse me. Okay, sorry about that. Yes, so we found that clear and transparent communication that focuses on testimonial style narratives, rather than just narratives that focus on payouts, as well as focusing on the framing that you're using to communicate insurance, has significant impact on perceptions and ultimately the behavior, the desired behavior that you're trying to prime. Secondly, we found that emphasizing popularity, so in the use of social norms and social proof, really emphasizing that there is a certain acceptability in the use of insurance. And this was particularly the case with the work that we're doing in northern Nigeria. It's a predominantly Muslim community, very traditional, very conservative, especially amongst the rural farmers that we were engaging with. So that sense of acceptability was key in driving the desirability for insured loan programs. And then also the fear factor. So in trying to prime a sense of control, we tend to think that if we stress how high the risks are and how important it is to ensure, that will guilt trip people or guilt trip farmers into thinking that insurance is the best option, when actually our risk experiments show that even within the high risk scenarios, farmers were not more likely to pick a safety net or ensure the possibility of a loss. So trying to prime a sense of control over the risks rather than using the fear factor or the sense that risks are beyond their control to prime the use of insurance may work a bit better. And then second to last, protect and don't insure. So again, this lends to the framing effects, trying to use words that are salient and relevant to the demographic that you are engaging. So insurance may be commonplace amongst most commercial audiences, but for the particularly underserved markets we were working with, the misconceptions that they had about the term insurance was significantly influencing the behavior that they were exhibiting, as well as the recommendations that they were giving to other farmers. So trying to understand the language and the terminology that works best to help eradicate the misconceptions that already exist. And then finally, we didn't speak on this, but this was more around time preference. So understanding the trade-off between paying for insurance now and expecting a benefit or reward in the future. So we did find that most farmers, particularly women, are very present biased when it comes to the trade-off in paying for insurance now versus the reward later. So trying to mitigate that and spreading the cost over periods of time. So for example, instead of requiring upfront payments, trying to spread that across the season. So different installments over the season, or trying to ask or request for payments at the time of harvest could help ease the perceptions of present bias that farmers have and help them make them more likely to invest now for future reward. So these are the main insights that we've pulled. I've tried to run through that as quickly as possible, but I'll just hand over to Nate just to have.
And so she's not going to hand over to Nate, but I'm going to pretend to be Nate for just a moment. I have now engaged with Busara multiple times. They're actually doing research with Modisher, who is part of the speaker for our program kickoff. But they're really continuing to lead and sort of jump ahead and thinking about how do we collect the right kind of data to better connect to customers. Roxanne, I am sure that some elements of this resonate given your experience. There may be elements that feel more unique to farmers. I think, Newton, that's a really, a good sort of lens of how much is this sort of farmer specific versus how much is this just best practice in the insurance space. As I mentioned before, Siani was our guest speaker the last time that we led this session, and he has incredible insights in this as well. So Newton, I see you already pinged him. But Roxanne, I want to hand over to you to allow you to kind of jump in, share your reflections and insights. But as you can see, Roxanne is on the ground in the sales space every day. Early on in Standard Chartered Bank, but has been engaging in the sales side of life insurance, both as a salesperson, but also as a manager leading sales teams, thinking about the now I'm not going to say that word today, thinking about how we lead the operations side of teams as well. But I'd love to sort of allow you to give yourself a bit of an introduction, who you are, what you do. And in particular, I'd love to hear some of your reflections about that Busara research, how much it aligns to your own experience. And we can already see some questions coming in as well. So Roxanne, I'm so excited to have you here with us today.
All right, Emma, thank you very much. I think the research has opened a lot of things, and I'm just sitting down reflecting on all the things that I've done in the past. And I think this research has rightly pointed out certain things that I'm even going to talk about. So that is going to even make my work very easy. Yes, very, very, yeah. And when you look at the market in Ghana, um, it is similar to what the research is also talking about. I have been with Standard Chartered Bank way from being a salesperson, what we call the acquisition team. I was with Standard Chartered Bank selling accounts, loans, and what have you, even to the point that I got to the position retail priority, where we're doing investment portfolio, running investment portfolio, bringing clients on board with regards to mutual funds, bonds, and what have you. And then I switch on to insurance. So I happen to be with Allianz, just as you've seen. And with Allianz, I happen to be the sales manager. And the sales manager at that time, we were launching the life department. And so we were training agents, we were training staff, giving them knowledge with regards to the product, showing them the techniques in selling insurance. Because just as the research has even shown, Ghana here, the penetration is very low. Why is the penetration low? Because most of the people here also don't understand insurance. And even if they understand, there are some other experiences that people have gone through, and so they tend to look down on insurance. I moved from Allianz and then happens to join a brokerage firm, that is K&A, as also a sales manager. There also I had a different experience altogether, and so I moved from that K&A to also my current company, that is Boyton Associate, which I happen to be a senior operation manager, which of course oversees both HR work as well as sales, as well as BDO, that is business development officer, and all those areas. So technically, I've had a lot of experience when it comes to sales. So I'm going to share this experience with you, and then as I go on, I will also enumerate some aspect that was just shared with regards to their research, and then we'll link that up. But mine is going to be, initially I wanted to do a slide, but I think looking at what is happening now, I just have to go straight and talk about sales and how we can also reach the underserved markets. Okay, so the topic given to me is customer acquisition and in underserved markets. Now, I just want to break this topic into two. So when we talk of customer acquisition, then we're looking at how best we can bring customers, or the process used in bringing customers down to the marketing funnel, from brand awareness to the purchase decision. Okay. In Ghana, just as the research said, when you mention insurance, for instance, when we are training the agents, we have the insurance companies normally rely on trained agents. They also rely on brokerage system. So when we go to the market, the customers normally would like to hear certain things that will actually attract them. Most often the difficulty has got to do with the agent we send out there, how they are able to couch whatever they want to say, their simplicity, as well as how they can narrate whatever the benefit and those things to the clients. And so most often, if you mention insurance, you have this client saying that no, just as the research said, no, as for insurance, anytime we do this, normally we don't get our returns. They come here and lie to us, and they don't give us any document. If you look at insurance itself, I would have loved to talk something more about insurance, but I want to believe that most of us know insurance technically is a combination of finances and then law. And so when I say law, then I'm talking about it being a contract. And so if it is a contract, then of course there are certain terms, certain legalities that comes with it. And this is of course if the client doesn't know anything about this, and then you go ahead to sort of just spouse out the benefit to the client. At the end of the day, all that the client is looking for is that you said A, B, and C, and so I'm supposed to benefit. And if you go by the terms and conditions of whatever you give to the client, you realize that the client doesn't even qualify, and that becomes a problem. And as we say, as we know, one dissatisfied client can actually spoil the whole market for an insurance company, because people tend to believe their close pals rather than an institution coming to tell them ABC. Okay, now the legal aspect of insurance is that we have certain principles. That principle, we have about 6 principles that governs the insurance. And these principles, we have the insurable interest, we have utmost good faith, proximate cost, and all these things help us to explain the policies or whatever we are selling to the client. If the client understands this, then of course, when you are interacting with the client, it becomes very easy. But of course, what are the modalities? Which way do we normally communicate to the client? Is it that we go by certain terminologies? Because most often you realize that the agents who we send out there to sort of go and then sell the product to the client normally goes with jargons, things that they have learned. And so they are not able to synchronize with the clients, especially when you go to the rural areas. So terms like you are supposed to pay a premium, the sum assured, they give them those kind of jargons. And so at the end of the day, the client is lost as to what exactly you want to sell. But I believe that when we go down to their understanding, as in when we say sum assured, we are talking actually about the assured money that will give in an event when the eventuality happens. This is how much we are giving you. Some of them then now understands this and you are ready to even what? Buy the product. Now, for the time being, in Ghana here, normally my challenge is when we go to sales, and then you happen to do, let's say, a call, booking an appointment. You call a client, you say, my name is so I'm calling from insurance company, A insurance company. Then you realize that the person just switches off, probably because of some information, lack of understanding with regards to insurance and all that. So the strategy normally we use is that we want to have some financial planning with you. We want to have some financial planning instead of using the word insurance, just as the research will actually put it. Normally, when you say insurance, they tend to look down, but if you give it another name that is more notable to the client is even ready to listen to you. So because once you say financial planning, they actually want to listen to you to know what kind of planning you've got for them. And so when you explain to them, especially the benefit, why they need to do insurance, then with time, before even you chip in the word insurance, they will accept and give and say, okay, that is a good product and I want to buy. So these are some of the tricks that we use in bringing or onboarding clients when it comes to client acquisition. Now, how do we tap from the served markets? There has been a lot of technology that has come to play. For example, we now have the mobile apps where a lot of insurance companies are now using it. the client have access to mobile, but even that one is a bit restrictive because there are instances you go to some part of the country and then normally we rely on telcos. And so when you get to those areas, you are unable to get access to those telcos. And meanwhile, these are also people that also would like to, take the insurance. So we have a lot of concentration within the urban areas where everybody is, fighting for this. The number of people within the urban area, everybody is now fighting for this same number. Meanwhile, a chunk of them is outside. Let's say within the villages where we can also bring on board. So we have this mobile app that is also restrictive when it comes to acquisition of customers. Now, we also have some USSD that normally insurance companies use. So by doing, they always will also give you a USSD code that the client can use. But most importantly, these gadgets do not spell out the terms and conditions or doesn't tell the client what the client is actually opting for. So it still takes the same agent or broker or whoever stands in the name of the insurance company to spouse out the terms and conditions as well as what the client stands to get. And that is the big gap that we are now facing now. And that's why we are having that percentage as at now. Now, when you look at the brokerage system, the insurance is said that they know it's a contract that comprises of a certain law. And so their fashion is said that a broker is supposed to be an intermediary between the client and an insurance company. Okay, so the broker normally explains the terms and conditions to the client, leverage on the relationship he has already built with a certain industry or client, explain the product well to the client, gives the client a variety of choice, because the broker has to understand all the policies or all the policies being sold by those insurance company. And so we tailor it to the client. And normally clients would like you to talk to them on their needs-based conversation, not that you come and then throw the policies to them. They always want to understand that these are my needs. What do you have to be given to me? And so what we call the need-based analysis, and then we recommend a particular product to them. So the brokers normally are doing fine because when they go to this client, they have a variety of policies or insurance products that they can sell to. And so once they engage the client on a need-based conversation, they tend to what? Tailor whatever investment or whatever insurance that they have to the client. Importantly, has what we experiencing now is the communication aspect. Just as I said, the kind of terminologies and the things that we use, the negative connotation when it comes to insurance, bad experience that clients, friends, peers have gone through. And normally clients will listen to those peers more than you, the insurance person, because then the person has gone through some difficulties when it comes to claim. If you go deep down to the issue, you realize that probably the client even didn't understand what he was opting for. There are some clients that we said, okay, I want you to insure this, let's say pure risk. He goes in for a pure risk, pays for a number of years, and now says that I've been paying for for a very long time, let's say 5 years. Why is it that nothing has happened and the insurance company is not giving back something to me? Forgetting that probably whatever he ascribed to is pure risk. So it has all got to do with understanding of the product. And I think if we are able to do that, product that first of all, we have to teach those that go out there to sell the product knowledge, how to pitch it, the kind of terminologies they are supposed to use for the clients, and then also win that trust. And normally, trust normally comes in when they know the person. So what normally insurance companies do is that they pick agent from that particular location. So you go to, let's say, Dansuma or Tema, you pick people around that catchment area, train them as sales agents, teach them the product, and they are able to sell to their peers. In that vein, they are able to listen to those people very well than bringing in a foreign person to come and talk to them. And then also, if in the influx of microfinance, this one has got to do with people with lower income. These are people who also don't understand insurance, but they believe that they need to do savings. And so if you are able to get people within that same catchment area, train the person for that person to also tell them or narrate whatever policy you have with them, they are able to also what? Patronize that particular product. So basically, I'd wanted to go deep down about what insurance is, but I think the focus is how we are able to tap on the underserved market. And these are the things that normally um, prevails when we go out there to do. So I'll pause here, and if there are any other questions, I'll also pick it up. Thank you.
I particularly like that you called out leveraging community members for sales.
Come again.
I like call out engaging members of the community when you think about effective sales. While I don't work in a sales-based space, what we've found with education specifically is that when a member of a community provides either testimonial or engages a user, there's significantly greater trust already because that individual is from a specific community. And they're able to break down barriers. They're, when I run trainings, if we're in Turkana, I'm not the face of that training, right? Because I'm not part of that community. And so we find there's much more efficacy in identifying the right salespeople for your community or the right facilitator or trainer. So I liked that you called that out because I think it's really important to think about who's actually delivering the message. And then there's what information are they using to deliver the message. I think in the chat there was an interesting conversation about Siani was sharing funeral cover and naming it as family support instead of funeral cover. Just simple language shifts actually create one, educate more easily, but also turn it to those who are most, with funeral, it's really about the family members who bear the brunt of funeral costs. Right? And so shifting the language around it to being about family support.
Support, yes.
Shifts the message, reframes. So I think those are just, two pieces, right? It's about who delivers the message and then are they delivering the right message?
Exactly.
Yeah.
And then the simplicity of whatever they are delivering to an understanding of the clients. So how you are able to break it down for the client to assimilate. So if you go by using certain terminologies that the client doesn't know, something like sum assured, because you have been trained on that particular product. So if you are not careful and then you go with those kind of terminologies, the client will not be able to assimilate or understand exactly what you, and so they are kind of, confused as to what they actually want, tailoring it to what you're also providing them. So at the end of the day, they don't see the need even to do the insurance. But in the same vein, if somebody goes and then narrates to them, just as you are saying, there is a family support, we are giving you this, and you are supposed to give us that, rather than using the term premium and sum assured. It says that you are supposed to pay us on a monthly basis, 100 cedis, so that in the event when something happens, we are giving you 50,000. They look at it more as something, beneficial than using the jargons. So that is so very important.
Yeah. I think part of what I like from Busara's messaging is about the push away from jargon. And one of the things they say is they have a very clear push towards testimonials. And whether existing users or sort of rephrasing those who are already using a tool and being able to say that, here's this person who benefited from this end solution. I think that it humanizes what is typically not considered I think insurance, as much as it should be so much more humanizing, it's not always seen as a very humanizing tool, right? It's if you get in an accident, I mean, there's so many ways it feels negative, right?
Exactly.
But in many, right, which is a shame. But in so many ways, it's a security blanket, right?
Exactly.
If I would never knock a boda. Only Kenyans will get that, but I would never knock a motorcycle driver here. You don't ever want to deal with that, right? But it's the security blanket. If you get into a fender bender, if your family hasn't saved for really unfortunate things like an unanticipated passing, right? And many of these things can cripple people, right? They can, here, at least in Kenya, I mean, the funeral expenses alone can set someone back multiple years.
Exactly.
And so in many ways, insurance is this incredible security blanket, but it's perceived as such a negative thing. And in some cultures, it's even seen as you get it, and it almost is like you've created bad juju around you because you're thinking about bad things.
You're pushing the person you are covered to rather die so that you get money. So that is a perception they have. The ones are going for this, I say I'm covering my father. It means that indirectly I'm pushing my dad to sort of die so that I enjoy. But the other way, just as you said, if you're saying it's a family support, whatever you do, the inevitable will happen. So we are not saying it should happen. However, it happens at that particular moment. Will you have that financial muscle to sort of sustain you? So we are saying that just put something small down there to pushing you in an event when it happens. But we are not saying that you're actually pushing your dad. So it depends on how the person couch it to them. Yes, and most of this insurance policy, the ones that look like investments, when you talk to the client is like, no, I have other investment that can give me higher returns. So why should I put my money into insurance? So we go like, fine, we are not saying you should leave whatever investment that you are doing, but what we are trying to say is to build that gap. Whatever investment that you are doing, probably you've not given the right to your spouse or the very people you are taking care of, that in the event when you are not there, they can easily access it. So let's take, for instance, you are doing, let's say, a savings account or T-bills or mutual for whatever investment that you are doing. Normally, the mandate on that particular investment is for you only to sign. So now, if the inevitable happens at that particular moment, the kind of lifestyle you've given to your family, who can access that particular investment? It is always for them to go to court, get what called probate and all that. That is even after barrier, before they can actually bring this court probate to the bank before they can access it. But we are saying that in the interim, within 2-3 days, your spouse or your beneficiaries can actually access 20,000, 30,000, whatever value that you covered yours, so that they can depend on that money until they have access to your particular investment that you need. So when you talk to their conscience about some of these things, they are ready to sort of do it. Apart from the regulatory one, the one that is compulsory, like the motto, and motto that everybody is supposed to do, third party, regulatory, compulsory, you're supposed to do it. Other than that, some of them we even still opt for them not having the insurance. So bottom line, it's just how we couched it. Yes. And I believe that
Yeah.
if we're able to do well in terms of couching, the penetration will go and we'll be able to actually harness the untouched markets.
And I guess, as I'm looking, Selena, we're going to get to yours in just one moment. There's a question, and I think Newton, please feel free to jump in the in case that I don't eloquently explain this. But in this conversation, and even in the Busara research, this is a lot of their research is B2C, right? It's about getting to the customer. And Newton raises what I think is really important, which is what happens. How do you think about language and communication when it's B2B opposed to actually being at your end user, which is your customer, but more around being able to talk business to business? Are there elements of language that's similar to the research, or are there other things? And I think Celine shared in our sales session last week around like how you talk about more numbers and the financial side when you're talking to businesses. But is there anything else we should be thinking about when we talk about B2B sales?
Actually get a question.
So Newton, feel free to just jump in and ask this better than I'm doing. But Newton's question was around, this conversation has been more B2C. And his question is more on the B2B side of things. How do you communicate sales and your product effectively when your customer is a business and not an individual user like a customer?
Okay, so you first of all have to know the type of business, because it's not going to be on the individual base. So it is about the business. I put like what the business intend to sort of achieve. So you look at their models, you look at their strategic thing, and then you probably will also know where they ought to go. So you listen to the client, the business plan, and then you can also factor in also channel whatever product that you have to the business. So it's just going to be for that one. I mean, it also depends on uh, the knowledge that company also has. So in terms of communication, you will get to know which terms to use rather than an individual who probably you need to educate more. And I believe that for businesses, they probably will have their own plan, and so you listen to them and then probably channel whatever solutions you have to suit them. That's a little thing I can say about it.
Thank you. That's really helpful. Celine, I know I saw your hand raised. You might have been answering Newton's questions. I'm going to pass that to you. Oh, hold on. And comically, it is both Celine and Newton that are waiting to rejoin. Let me get them back in. Hi, Celine.
Hi, I'm back. Oh, internet.
I saw your hand raised. I'd love to hand it to you.
Yeah, no, I thank you so much for this presentation. I mean, I'm going to echo the jargon because that's people tend to make it very complicated, and the reality is like simplicity sells. I'd love to ask a question and to the speaker. Sorry, I forgot your name and I can't see it written for some reason. Apologies for this.
Roxanne.
Roxanne.
So, thank you.
Roxanne has the best name in the world, by the way. So just Roxanne, I'm a big fan. Back to you, Celine. Sorry.
For the rocking name. So what do you usually, what is your technique, if you have developed any, when you start to see that, you know, people don't understand the concept or have like whatever, you know, they heard a story and suddenly you see that they are completely blocked. Like, how do you usually try to turn this no or this skepticism into like, okay, that's interesting, I can relate to this? Like, do you have any stories or any particular technique that you've developed, I imagine, over the years?
Okay, so you meet a client and the client already has some bad experience. Is that what you're trying to say?
It could. It's either about experience or somebody from the family, you know, like they don't really know. It might be ignorance. It might be like a personal experience. So obviously it will depend on the case, but.
Yeah. So you would like to sort of dig down what actually the problem is, empathize with the person, and then see if you can actually render any solution to that effect. If you can't do that, the best thing to do is to educate the person as to why it has happened so, and then going forward, what the client is supposed to do, not to go to. Normally, you see, the thing has already happened. So, and normally, if it happens that way, let's assume that it's way back, or a colleague or a peer have normally informed the person as to what he has gone through. If you dig down, you realize that the customer will only tell you about his or her side, the sweet side of her story. That I have done A, B, C, D, and I was expecting this from the insurance company, and they didn't do that, and they've taken my money and never gave me anything. So, but if you go deep down, just as I said, it's normally a combination of contract and law and finance. So possibly, he or she might have flouted one or two laws. You look at it, if there's something that cannot be recouped, you just have to empathize with the person and then educate the person as to why it happened so. Once you do that, the client is able to sort of calm down, and then probably if you also have any solutions you think you can also give, you go ahead and do that. Human beings are not rational, let me put it that way. So depending on the situation. Yeah.
Thanks a lot, Roxanne.
Thank you. I'd love to open, Celine, holler if you have anything you want to follow up on that question. But I'd also love to just open to the room. I think, you know, one of the benefits of having Roxanne here is that he has real on the ground experience in Ghana, and we have about 90% of our cohort is based in country, but we also have those who are Cameroon, and also coming from Kenya and beginning to make inroads in the region. And so, you know, there's a real benefit to deeply understanding your user. I talk about this all the time, but I think that Roxy can share some unique insights about his experience on the ground here. So as always, raise your hand, drop a chat, or drop a comment in the chat, but of course know that I'll probably ask you to raise your hand and say it. But I'd love to hear if there are any questions we could share. So I'm sure there'll be a couple others that will come in. But one that comes to mind for me is one of the challenges I find. So I'm going to go back to more of the B2C sales. So thinking more about sort of the customer as your direct end user. What kind of work do you do to support your sales team to effectively like connect with their customers? You talked about it's important to try to find salespeople from a community so that they're better able to connect. Are there other things that you do to equip your sales team to actually be able to effectively sell insurance on the ground?
Yes, we normally will provide them with certain flyers. We provide them with some stuff, especially when it comes to the calculation aspects. But most importantly, what we do is that in getting people to go and then sell, let's say, to a high profile client, normally we go for people with tertiary, background. They are able to assimilate and then able to think on their feet depending on the situation that happens within them. Because whatever you teach them is not cut in stone as to this is how to handle objections or this is how to do sales. So normally we provide them with some flyers, we provide them with certain tools like quotations, and then also we have a special app that if you are somewhere you need answer or a question, you have a question, you can just put it on, and then your sales manager, wherever he is, can also look at it and then give you a quick response. But basically, it is more about training, because once we go to the field, whatever happens, the following day we have a training session. We talk, digress, and get to know a lot of things that are happening in the market. And so each of us will share ideas, and then it builds them up. So it is something that has got to do with training, yeah. But also we give them certain materials to have with them so that in case any question arises, they can also still look at it.
Yeah. No, I think that's great. Francisca, please jump in.
Okay, so Emerson, thank you so much for your presentation this evening. I just wanted to actually find out from your experience. I'm sure you've had maybe technology advancements is ongoing, and then you've been taking advantage of it, maybe from one point to the other. When you're doing, how effective has maybe the mobile apps and the USSD, these things that people are actually coming up with, being effective in your insurance space? Do people actually use these platforms, or do you actually have to go back and then go the manual way of talking to people? Like, I just want to understand how, so for somebody like me, if I'm using more of tech and then more of my marketing is more of digital, do you understand? I just want to see how we can merge both of it, because you feel like people don't really, how should I even say this? People don't really trust the digital space so much. So how do you merge the two? Is it more, even though you have a technology that you are building and then you are trying to pull people along, you still have to go the traditional way of actually meeting people face to face, and then I don't know if I'm communicating.
I get what you're trying to say. The technology or the app has its own pros and cons. When it comes to getting funds, or let's say growing your business, then that aspect of the mobile app or the USSD is fine. You remember, I mean, for insurance, we are only giving them a platform to pay their premium. But the onus lies on the client to actually pay his or her premium. But you, the insurance company, is giving them a platform within which they can also pay their premium. So first of all, if you give them that platform of the mobile app, one, normally they do it and instantly they get a text message. So even if the person doesn't know you from Adam, and then you come preaching a particular product to the person. The person still doesn't believe you, as in you coming from this particular A or B company. When you introduce the app to the person and then you try to educate them and the person even signs on, automatically the person gets an alert that should tell the client that you are actually not a fraudulent person. It also still gives them some amount of what confidence and trust that yes, my money is going somewhere. But again, you look at it from the other angle and it's like, so my money is gone. Assuming I don't see you again, what happens to my money? But it all depends on the trust that you build with the client. And normally we marry the two, the traditional way of meeting the client one-on-one and then doing your own presentation, whatever it is, before you even introduce that of the technology as in e-message or whatever, because most of them, they will not read it. Once we send it to them, they will ask, well, send it to me, I'll read, but they will not read, because even some of them look at the font size, very, very small, and so they will even have time to read. So the ideal way is to do the one-on-one, physically do a presentation to them, and then you run them through the app that in the event when I'm not even here, you can still do whatever contribution you want to do, looking at whatever focus that you have. Let's say you have some target. I'm supposed to do some savings to up to this. I don't want to miss it. So even if I don't come, I can still do that. And more so, they also believe in the app if the way of doing claim can still go through that technology. So I don't need to come to your office before I can do a claim. The same way that I'm paying my premium to you, I should also have another means of making you know that I actually need my money or I want to do a claim. If those things are in place, the customer tends to, appreciate that. So I think gradually people are buying into the technology. It's a good thing because normally it also helps to reduce fraudulent activities. The past, we used to do hard copies, let's say paperwork. And so we go to a client, the client does it, the client tells you, I would like to start maybe the following 2 months. And because you are a salesperson, you're looking for your commission or whatever it is, you come and then you process it. There are even times that the individuals, if I have another friend in another insurance company, because he is also being frustrated to come along with close deals, I'll normally also give the details to the person. The person also do that and then submit it. So by the time the client realizes, deduction is ongoing. But for this one, once you introduce the app and the person is supposed to approve it by way of text message that comes onto the person's phone before you can actually process it. And with this technology also, normally it goes with the first premium. So once you pay a first premium, you cannot come back and say that I actually didn't approve of this particular policy because you did approve. Nobody knows your password. And so it has its own negative input, but the positive outweighs the negative aspect. That's what
Thanks, Roxanne. Francisca, do you have anything else you want to follow up with or any additional questions to what was shared?
I'm good for now. Take care.
Excellent. Thank you. I'd love again, as always, to open the floor to anyone else in the cohort who has additional questions, things that you want to have us dig into. I also, welcome Florence, or anyone from Florence's team at Mobile Web Ghana who wants to also jump in if there are things you're wondering as you've listened to Roxanne share. I'll give us, just a moment or two to think while I also think of my own question. So,
I
Roxanne,
want to
while
find
others are
I want to find out. Sorry. I want to find out for startups. Sorry.
no stress, you got a little bean. We entirely welcome small humans. If you turn your video on and show us the cute baby face, we're even more excited. Prince, back to you. Sorry.
I've handed him over to someone. Yes, I wanted to ask for people who are starting, I know that your experience is primarily with big companies, Stanchards, who are known brands, Alliance Insurance, they have huge resources to do marketing, to reach to anyone that they want to reach. Anyone that they want to reach, but this insurtech, especially in the startup situations, it's always acquiring customers. Even one customer is a bit difficult. How will this young startup be able to build trust and easily acquire customers in a market setting like ours that people really don't believe in insurance? Even me, it took me a while to, like, I've had insurance agent chase me here and then they come to my office, they'll come and they'll present to all my employees, they say do this. I said, look, I don't need this, I don't need this. But be on this program is also teaching me a lot. Like, so how would they do it? How in even for people who are educated, they still don't even understand the importance of insurance. And so how will this young startup be able to acquire customers? Is it easy for them to do B2B or B2C? I mean, I'm sure some of them will have B2B, like the climate change startups. They would like to target farmers individually with their application. How is it? Because one of the most difficult things, even for businesses, is acquiring customers. That especially if you are new, people don't know you. They always give excuse. When did you come? What have you been doing?
Okay, thank you very much. Okay, so for startup business, I think one technique that you need to employ is to rather ride at the back of insurance brokers, because they already have their customer base, and you as a new starter, if you ride at the back of a broker, it will help you. Why am I saying this? Because the brokers normally know the clients. I mean, the clients are familiar with the kind of stuff that they do. So you as a startup, you can use a broker and then still do your B2C. You start with your what we call the natural environment. Your natural environment should be those that you can easily talk to, because it's a small business. You are starting. So once you are able to deal with your natural environment, the very people around you, let's say friends, people that you can easily talk to, if you give them these good services, they will intend also sell you out. And with time, you will realize that you are building your client base. It is not easy to just go to a new terrain. I mean, if they don't know you and you want to sort of sell to them, it will take a lot of energy and a lot of resources to do that. But one, if you ride at the back of a brokerage system, and as well as do your own this thing around your natural environment, with time I think you can actually come out successful. This one, I mean, there are other techniques that you can also employ, but this is what probably as at now I tell you. I don't know if
So if I understand you well, you said partnership is the key to go if you're new, if you are a new entrant to the market. That will give you a lot more leverage in terms of customer acquisition
exactly.
than
The
if you
insurance
go
business,
to.
let me chip in this. The insurance business, the premium that clients normally pay has already the amount that has to be paid to the broker inculcated in it. That is how it is. So if even the client goes directly to the insurance company, the premium that the client will pay already has the broker fee in it. So you taking a broker doesn't affect you that much. You will still get your premium, just that you build your customer base, and then with time you can build up your profit. The only difference between the big companies and yours is that for them, clients already know, so they will probably go directly, and so they will get that fee that has to go to the broker as well as their premium and then their interest. But for you, a new starter, if you write on the broker, you are not throwing out money. It is the same money that the client is paying that you are using some to pay the broker, because whatever premium that the client is paying, the broker's fee is already incorporated into that. That is why I'm suggesting that you can rather use the broker and then still do your own natural environment. I don't know if you understand what I mean.
Use the broker and use your own natural environment is the conclusion.
Yeah.
Yes, for a startup. I mean, what it means is that if you're a startup, you need to do more work. You need to,
Exactly.
and this program is to be able to give you an understanding of what is happening on the ground in the market, and I think that you're right. And my second question is, you mentioned a bit of, sorry, Emma, if you want to chip in. Okay. You mentioned a bit about low adoption of technology, and then also interfacing technology at a point where it is necessary. All these companies are insurtech companies, which means that they are using technology to power or drive their businesses. What is your key advice for them? You mentioned that they still have to employ the traditional methods of reaching customers, and also then after that they come and use technology. But the goal of technology is to be able to break barriers, to encourage speed, like with the speed of light. You can be able, once it's a platform like Best Code or other things, the thing is there. What would you say is the best marketing strategy or best means to reach a customer with an insurtech business? Assuming they don't want to do the legwork. I mean, the legwork is going out to tell people that, look, I have a website called Best Code. Go there and then choose other things, do comparative analysis. What is the best way? Is there, after all these years of experience that you've acquired, what would you say is the defining moment when it comes to technology, and what would be your advice for these startups?
The technology is the best way of reaching out to people. Okay, and that is the best way reaching out to this untapped market that we are talking about. But if you listen to me very well, you realize I was talking about the urban areas being saturated because everybody is chasing these few people for the same policies or some only little differences. Okay, so then the question is, how do we tap from these other areas like the other village, not the urban areas, but so to say, let's say the town or villages? The only problem that we have, I mean, in terms of technology, most of the apps that we are using normally uses the telcos. Insurtech will probably have other technology. I'm not good in terms when it comes to technology. I don't know the kind of technology that can be used, and I think they will be in the right distance to tell us those. But what I'm saying is that most of the technologies that we are using with regards to the app, and you realize that 99% of the population in Ghana, almost all of us have phones. Okay, so we are currently using maybe phone apps and a USSD to sort of bring clients on board. But when you go to the village, there are certain parts of the village that if MTN is not working, Vodafone will be working. And you have maybe Zen working and then this one not working. However, their mode of collection or accessing is different. If you look at Vodafone, for instance, before one can transfer even money to another person, he needs to get what we call the voucher or the voucher number, whilst MTN can just do it directly for you to get. So there are instances when you get to a particular area, you are sort of restricted. And there I probably would say that, okay, then the manual aspect is good. But I mean, just as you are saying, technology is the fastest way of reaching because you can design something that can actually, and just as I said, I'm not good in terms of technology, so maybe InsurTech will come up with certain technology that will help us to tap into those areas as well.
Thanks,
Okay, so
Hassan.
sorry.
Go, Florence.
Oh, so what it means is that if you're an insurtech company, your market is you have a niche market because there are segments of the population that are not either connected to internet or so you should clearly identify that niche market and then you can target them with your product, right?
To some extent, but there are still some technologies you can still employ even if you are adulterated, like the USSD, which does not depend on the internet.
Internet
That one,
connectivity.
yes. So you can still use those ones and still have it done. Yeah.
Excellent. I see Newton and Richard have both raised their hands. Newton, I saw you first, so I'll let you kick off. And then Richard, I'd love to hear from you next. Newton, feel free to unmute and ask your question.
All right. Thank you very much, Emma. So my first question will be on a brand, selling with a brand. So as a startup selling with a brand, which based on our experience, which brand do you prefer we use? The brand we are building or that of the underwriter? Because obviously we'll be working with underwriters. So which one do you prefer we sell with? Because selling with the underwriter will be very good, but detrimental to selling with the brand of the underwriter will be good for to catch more clients, but it's better for the company for the growth, growing its brand name. So based on our experience, what do you advise us on that? The second question is based on fraud. So working with salespersons, I think you must have I have experience about that equally. Salespersons, they're always at times aligned with the fraudulent financial activities when it comes to the payment of premium. So how, or claims, even claims, because they always get involved in the claim payments and premium. So when it comes to fraud, how based on experience, what measures did you use or you are using to actually combat those situations?
Is it Atukwamina, right?
Sorry, Newton.
Newton, okay, Newton. I didn't get your first question well, but I will answer the second question so that
I can come again. I can come again with the first question.
The first
Yeah,
question.
the first question is about selling using the brand. So as startups, which do you advise to we use more appropriately to sell? The underwriter will be working with, or using our own brand, which we are growing to sell with.
Okay, so I would say that you should use the brand because at the end of the day, it is the brand that you are going to promote. The underwriting distance would be where probably you need to throw more lights on the things that you are doing to your client and all that. But ultimately, it is the brand that you'll be promoting. And so for me, I think the brand distance will work faster for you when it comes to recognition than that of the underwriting. And we talk of fraud, right? Fraud. Okay,
Yes,
so
fraud.
the technology is even helping with regards to the fraud. Gone are the days that the agents are supposed to take cash from the clients. Now, agents don't have any access to cash. And so whatever the client does, normally we have what we call the customer service, who also do a double check by way of calling the client and making sure that the information that has been sent to them is correct. So when it comes to fraud, I think technology has minimized it. I'm not saying that there wouldn't be fraud. I mean, people are always smart. They always find ways of, getting their own way. But looking at the technology we are using now, as in the mobile app, compared to the traditional way of, meeting the client one and then taking cash. I think technology has reduced fraud drastically. And normally, before claims are normally paid,
Yeah,
they require that yes, the
yeah,
client will.
yeah. Sorry to cut you. I'm talking about the situation where you work with a client. There are certain salespersons, they have personal relationship with clients, and at the same time, the client trusts them and can even hand over the cash to them that, oh, you do it. No need to use the payment platform and so on. I trust you. The client trusts the salesperson, but it will turn out that I've witnessed situations.
Yes, but see, when we are training our agent, we normally will tell them, I'll spouse out certain
Like
things.
that
You are not supposed to, under no circumstance you are supposed to take money from a client. But however, if it is some agreement between the client and then the agent, normally our terms and condition also comes. Normally it will be sent electronically to the client that under no circumstance should you give money to the agent. If you do that at your own peril. So those things are spelled out to the client as well. But I mean, just as you are saying, I mean, if there is that cordial relationship between the client and then that of the agent, that is fine. But the company will not be liable to any fraudulent when it comes to loss of money regards to the client complaining that it's because those terms and conditions will be laid out to the client,
Okay.
via
So
email or
if I
whatever,
understand you well, we have to
electronically. So
actually, if I understand you well, we have to make it clear in our terms and conditions that
exactly,
client shouldn't handle client. Okay, thank you very
exactly,
much.
exactly.
Okay, I think that's all for now.
Mm, Roxanne, it looks like Newton dropped, but I think if you want to finish answering anything, and then we can also shift to Richard after you finish.
I think I said I'm okay for now.
Oh,
No
you're
more
back.
questions. No more questions for now.
Okay, perfect. Sorry.
Thank you.
Excellent. It might have been my internet. Richard, I want to hand it over to you.
Yeah, so I think I see mine more of a contribution than actually a question, and it's more referencing to the question the lady asked initially, in terms of like how to reach clients, right? If you look at most of insurtech coming to solve a problem, and normally they are trying to solve a problem which the old system has failed, right? As in flexibility for the insured and transparency, all those kind of things. Like you see that most of insurtechs come in to solve these challenges, whether it's on a B2B or on a B2C. But the underlying thing is that they hit a roadblock, which is either by regulation or the products building themselves, right? So maybe an insurtech may come in that, okay, we also want to help in the distribution, but then you get blocked by regulations because it's the insurer that has to design the product. And you look at the underwriting factors or the actuarial factors of designing the product comes with still the old mindsets that we still have in all the products we have. Like if you look at motor insurance, there's no flexibility in terms of the underwriting, right? They will say that you can have, let's say, a 1 month policy and all those kind of things. But then if you equate it, you don't see any innovation within the underwriting of it, right? And on the other hand, you see insurtechs seeing like opportunities that they want to disrupt the market, but then they get back to the same roadblock that, which is the various regulations, the various products that have been built over the years have still not succeeded in extending penetration, and Africa is still less than let's say 3%, comparing to the global insurance penetration average. So then if we say that we are still using the same old method, the same old mindset for penetration, we are still not going anywhere. So my contribution is that we should also look at the eye of on the regulatory aspect of it. How do we build better products? How do we build much more flexible product that people are yearning to buy, not people are forced to buy? And if you look at most sales agents, most insurance agents, most insurance brokers, most insurance companies, they are more of like forcing people to buy product. Like it's, I think there's a term that insurance is not sold, it's not bought or is sold or whatever. There's a term they normally use. That means that the client is, I think Roxy, you're laughing. Maybe I'm sure you know the right term you guys use, right? Yeah, there's a term that they use, which sometimes is very funny to me. So that means that the client is being forced to buy that product. My whole point here is that whether we are doing digital distribution or physical distribution, people don't like insurance. It's because what the same underlying mindsets used to actual the product are still the same thing we are using now. So how do you expect a penetration in an industry where over decades we are still using the same mindset to build a new product? You see companies saying that, okay, we are innovative, we brought out a different product. Normally it's the same thing with different branding. And if we say we are going that route, we are just lying to ourselves, regardless of the technology that come in, because at the end of the day, we are looking at serving the end customer. So my point will be is that how do we engage the regulator? How do we ensure that we're able to build relevant products that suits the client's need? And when that is being able to achieve, then we can be able to say that the digital means or whatever means we want to get to the client, we can be able to achieve it much more faster. So to me, I'm just coming from a point of a contribution than a question, but then maybe Roxanne can give his points around that. Thank you.
Thank you, Richard. To some extent, I will agree with you. But I mean, we have evolved with time. Now people are coming up with policies that are tailored to the client needs. Like I said, we have moved from that aspect where we have to force products on the client. Now it is a need-based conversation. Okay, so that's why I'm saying that now even most of the insurance companies are now going for the tertiary or the degree holders, then coach them, tell them, train them as to how they can actually what do sales with regards to what relationship based rather than product based. Okay, and again the regulator is also there, but most often what they also want is that you come with a product design or a plan. They normally what they'll do is that they'll give you 2 years sort of pilot it and see how it goes. If they realize that there are some difficulty with regards to the client, subscribing to it, then that is why they will halt it. But normally now they have given that gap that you can actually come with a business plan, give you that space to run it for 2 years. And then if they realize that it is doing well in the industry, they allow you to sort of remember that, like I said, insurance is a contract. Normally, it is the client that rather has to do the offer, and then the insurance rather do what? The acceptance. But if you look at our jurisdiction in terms of Ghana here, because we go to the client to tell them, it looks as if we are rather doing the offer. But in actual sense, it's the client that rather does the offer. We analyze it and then accept that particular offer and ask the client to pay a particular premium. That is how it's supposed to be. So people are coming up. I know some companies that are coming up with some policies that will help the young one to sort of get married. All this thing has got to do with risks. So before an insurance company comes up with a certain policy, he is looking at the risks involved. And you see now, in terms of digitization, we are not there, because you can get a client who has let's say stays in this particular apartment for 2-3 months, and the client is no more there. He has moved to another. You're trying to trace even the client, you wouldn't get the client. So when they are doing this, they are also looking at the risks involved. In as much as we want to meet the client need, we also look at the risk. So that is why it's as if everybody is doing their tradition. But trust you me, things are coming up, and very soon you will know.
All right, so,
I see you. I'm gonna jump in whenever you're ready.
Hello, Emma. Can I proceed with my question?
Mm-hmm.
Okay, so just as a partner here from LBH, I wanted to know, then little has been said about um, insured loans. I want to know how different insured loans is. I mean, because we've been talking about selling insurance to businesses and direct to customers. As I mean, insurance as a standalone product. But what about insurance being fused into a loan, so credit, so it's an insured loan? Is there any difference with when it comes to regulation? Is there any difference with the way we sell it?
I'm a bit lost at the question. I didn't get it. If you can mature your voice a little, raise your voice a little, I think I will. I didn't hear what you said,
Okay,
please.
so I said not much has been said when it comes to insured loans. Insured loans. So what I want to know is there any difference with when it comes to the policy
When it
side,
comes to
and is there any difference from the law when it comes to the policy side? So how do you communicate? You spoke about insurance being finance and legal. So, I mean, the legal side is the policy as in terms and conditions. This is what you need to do to, I mean, in order to be able to qualify for a claim. So, I mean, what does it mean in terms of the policies as in the legal side, and what does it mean to sell, I mean, insurance, um, insurance has been embedded into a loan, a line of credit.
seriously, I guess some bit of the question I'm not able to get it. So you are asking the legal aspect of the insurance and then the finance aspect of the insurance. Is that what you were asking?
Yes, but with regards to insured loans,
Insured loans.
insured loans,
Okay.
yeah.
So for insured loans, normally this is normally banks that normally goes for the insured loans. Once the microfinance or the banks, those that are custodian of our cash, they normally will go for insured loans, because then the fear is that if probably they are transferring the money to, let's say, Bank of Ghana or anywhere, armed robbers or whatever it is can actually attack them and take the money. So they normally will insure money in transit, what we call the money insured loans. And then also when you come to the individuals, even banks, when they are giving out monies to individuals, they normally we see that aspect that they said insured loans or the insurance on the loan. And that one has got to do with when the loan goes bad. There are certain percentage that the insurance company will normally pay, even though at times we don't do 100% payment when the loan goes bad. But even that one, all the mitigation this has to go through before the insurance company pays, a bad loan, and that's what we call the insured loans. But when it comes to insurance, we don't actually give loans. Insurance is where you yourself want to,
Okay.
you yourself want to sort of cover an eventuality or something that you anticipate that will happen in the future.
Yeah,
Said that when
I get that. Right.
Yeah.
I get that side, but what we do as LBH is we provide credit to smallholder farmers, and on the other hand, we also provide insurance to the same farmers. But how we went about this process, or how we've gone about this process in the past is we give them the credit, and then we expect them to buy the insurance. Right now, we are thinking of, because it's credit for agriculture on the credit, and it's something we've spoken about with them and they've agreed. So instead of like the banks, the insured loans from us in traditional banks do, in terms of defaults, we are the same area yield index insurance we are selling to them. We want to like literally deduct it from the money, the credit they're asking for.
So we don't have a policy or a product that actually goes by primarily giving out loans. But you can have a policy where you have some aspect of it that you can actually, and even that the loan that you are giving will not be more than what the person has actually accrued. Okay, for instance, you are doing investment. Within the investment, they can tell you that you can actually come for a loan of, let's say, 50%, but the 50% will be as in the money that you have accrued, okay, that is given to you. Other than that, there wouldn't be the difference between an insurance company and that of the finance or the microfinance. We are two different industry. Once you veered off and given out loans, you are no more an insurance person. That's why you see that most of the investment that we are doing, we have some package within the investment that also takes risk. And so that is what makes us different from the financial industry. So we don't have an insurance company that is giving out loans, as in giving out financial distance to people and then taking them on a monthly basis. No, that is not an insurance. And the regulator will not even allow that.
I know that we are getting a little past time, and I don't want to keep you, Roxanne, too much longer. I do see that Abednego, I may or may not have said that remotely correctly, but I'd love to hear from you. I don't think I've heard your voice yet. If there's something you want to chime in before we start to wrap up this evening. And if not, Richard, is there any last thing you want to add into the conversation?
Yeah, it will take some time, but I think at the stage in which we all are, like all insurtech. So the good thing is that like I find myself in a position where my service is serving both insurtechs, the traditional players as well, and people looking at to distribute. And you can still find the same worry among all these three parties, and all boiled down to like the product development. So maybe in the future we can have more intensive conversations with the regulator, more intensive conversations with the actuarial people, right? That will help because as of now, insurance is seen as a marketing activity than an actual, let's say, underwriting process. Like if they talk about targets, they just talk about sales. It's more about 90% sales than the actual framework of risk management itself, right? And like I don't blame anybody, but that is where we find ourselves currently. So maybe it will be good that we bring some of these things towards the table with the regulators as well, because our counterparts in the other financial services, which is like the fintechs, the banks, they've been able to achieve that kind of flexibility around that, right? How do we achieve the same thing within the insurance space? And it's not like something too out of the box. It's more like all parties coming out on the same table and we all find solutions to it. So that would be the last thing to add. Thank you.
Hello.
Hi.
Please, I wanted to ask a question. With the technology for the insurance companies, maybe the mobile apps and those other platforms, when someone makes a claim and maybe the person tends to be lying about it with the mobile platform, it makes it a long process for the insurance because maybe they will have to actually get involved, come to your place before they can indemnify you or any other thing.
Yeah, there are a lot of technologies and a lot of techniques that we employ when it comes to claims through the app. So it is not that we have to come to your place and then get to know that you actually, I mean, now there's competition. So there are so many ways. There are some even micro insurance that we say that when the person is hospitalized for more than 3 days, you can actually make a claim. Yes, and normally when you do that, they expect you to take a picture of the bill, and then it also will be spelled out to you that we need recognized hospitals. So we wouldn't go to any traditional hospital or herbalist to do this. So you go to a recognized hospital, and they can always ascertain as to whether it is true or not. Just as I said, I mean, we live in an environment where people can do things, but at least with the technology, fraud is normally minimized.
Okay, thank you.
Great. Well, thank you all. I know we are past time. I really appreciate everyone's contributions and feedback. Roxanne, thank you for jumping in and leading this conversation. I think much of the Busara research, I think, is a great foundation to think about how we engage with B2C sales, what actually is meaningful when we think about connecting with our customer directly. I think, Roxanne, you shared some of the synergy or alignment in your own practice with what some of the research is showing. I think in addition, we dug deeply into, or at least started to dig more into the surface of what is the role of technology as we think about insurance. So Roxanne, you're invited to our next conversation, but next week we're actually going to spend the entire time talking about how technology is reshaping insurance. Right? We know it's making a dramatic change to how we think about protection for livelihood, right? And so we'll be joined by a teammate from Prudential who's going to walk through really what's happening from the technical standpoint. So we highly recommend that you all join in and engage in that conversation. I think it really will begin to unpack some of the questions that we heard today. Right. And Roxanne, where there are still places where you're noting the evolution or the shift in how we think about insurance. Michael Nishish has in-depth perspective to how the entire insurance industry is shifting as a result of technology. And Richard, maybe not Richard, maybe Abnego, not quite sure, but one of you highlighted, right, that when it's not as face-to-face, there feels like there's more opportunities to use the system, but actually I think Michael really digs into technology actually holds people more accountable. And he can talk about some of the way that AI and other elements can do that. But I think it's a great way for us to kick off our focus on product. Roxanne, I'm hugely grateful for you being here with us today. I hope if the cohort reaches out and would like to connect with you, I hope that I'm allowed to share your email. I think that there may be some who wanna connect further and learn more from you. Absolutely. But thank you all so much for being here. I hope you guys have a great rest of your evening. I won't tell you what time it is in Nairobi, but I'm so excited that we had this chance to talk about customers who to me are, I mean, they're the core and the center of all the work that's done by any company. So the more we think about how we create information that's accessible, that creates trust, that helps to break down barriers, that's delivered by the right people, right? The potential for your product to actually get to the right people is about how you think about engaging your customer. And how you think about identifying barriers and creating the linkages or the ways to break those down. And that includes thinking about language and how you focus on being more accessible. So again, Roxanne, thank you so much for all the insights you shared. For the team at Busara, if there are questions you have that's unique to that team, please let me know. I will absolutely connect you with them as well. And otherwise, everyone have a great rest of your night.
All right. Thank you very much.
Thanks, everyone.
Thank you.
Thank you. Thank you.
Bye.
Bye.
Bye.